know what that sport is, but I definitely think it needs to be in the next Olympics. What it reminded me of was the S&P 500, the SPY, hitting that 20 EMA, going back on offense. We're now above the 5 and screaming higher. It's clear that we've got a full V-shaped recovery, and what we've got to figure out is how high can we go. I'm going to take you into the SPY chart. I'm going to take you into the NVDA chart. AMD popped off with news of an acquisition. ZM, a shipping company, went up today over 20%, a huge move. The question is that move now over, or is there more room higher? There's an interesting pattern on that chart that I want to show you guys. I'm going to timestamp this video for your convenience, and at the end, I'm going to give you guys a bonus crypto that I loaded the boat on today. I had a pretty big purchase. That's why I would say I loaded the boat. And the reason why I did it, guys, I'll tell you about it more when I get to that section of the video. But in short, it's forgotten. It's sleepy. Nobody's Google searching the best next meme coin. The entire thing has gotten forgotten. And that's when it's time to buy. Because I know that the bull run isn't over, that the altcoin season is going to possibly be in full swing by the end of this year in December. And so now may be the very best time to be a buyer of crypto. And that's why I was a buyer of crypto. I'm going to get into these hot stocks. This is the Stocks with Josh show. Thank you for joining me today. Thanks for hitting the like. Thanks for just dropping me a heart in the comment. Hit the like and subscribe if you need better technical analysis of these markets and predictions. Maybe they're guesses. We're following the charts. We know what we're looking for. We have to see it play out. We're not trying to get ahead of these markets. We're trying to follow them from day to day. And right now, you better be chasing them because the markets are moving quickly. The markets are moving higher. And if you got too bearish, fact is, we know that you got too bearish because retail sold $1 billion into the dip while institutions were buying $14 billion. Retail was seeing an outflow from the markets. Institutions were flowing money back into the markets. And that's a story that's just barely beginning, because what we're seeing in small cap is we're seeing a rise of breadth and thrust. Now, last time I talked about thrust, I got a ton of jokes, sort of the that's what she said type stuff. You guys can spare me that. But thrust is an indicator in the charts that shows an initial burst of buying that is typically followed up by more buying. And so what it simply means is that Friday, when I told you guys these markets were hot and that we were on a V-shaped recovery, and I gave you guys that visual illustration of the dude on the motorcycle with fireworks shooting off the sides on a wheelie, that's what the markets are doing right now. But the big question is it a bear trap? Is this just to draw retail back in so they can dump their bags back on retail again? I don't think so, and I'm going to tell you why. I'm going to cover some analysis on that. We're going to talk about some data points we're going to be watching for, the market will be watching for this week. But NVIDIA's been a market leader. Not this week, but next week, Wednesday, they report earnings. And the market, as I've been telling you guys, is giving these guys the benefit of the doubt. Now, pre-market, they were flat. The chart was gray, nothing exciting. But as the day built, NVIDIA price just kept rising and rising until by the time we got to close, it was an absolute breakout of it against a descending line of resistance. This, and again, it's kind of what I said to you guys, no sell signal on NVIDIA. So don't sell. Don't panic sell. When there's no sell signal, don't sell. Now, I do believe previously I said that we could come back and test 120. That's off the table. I'll give you guys the new test level today that's possible, because all candles are not just going to be green and gap up every day. We will come back a little bit. But again, as long as we stay above those EMAs, that 5 and that 10, we're on offense. The team is pushing the ball forward into the end zone, right? And we're going to hit some big numbers there. And I'm holding my shares, holding my options. I actually got LEAP options for 2025. They're not the most profitable ones, okay? So if I had gone with a shorter time frame, they'd be up huge. I'd be up hundreds of percentage points. But I wanted something that could handle some of the volatility that's ahead in these markets. And so I bought something with a little bit of time. They're up beautifully. They were high premium options. I think last I checked, they were up over 50%. I'll have to quickly check real quick, tell you guys what they're at right now. But as far as the options were expensive, so being up 50% on these was a really nice price. So yeah, these are the January 5th, 17th, 2025 options. They're currently priced at $24.75. They were at $15.50 when I added them, and they're up 63%. So each option's basically up $1,000. And so this is a position that I felt that I would be more comfortable adding to. Rather than getting in and out on a scalp every day, this was a position that I felt more comfortable adding to. This was a great day in the market so far. I didn't do a ton of trade alerts in the Discord because I'm still dealing with a lot of administrative stuff and some other details, but I did give an update on some of my trades. I have to shout out Spy Lord, who gave the family 139% win on the SPY. And him and I were chatting throughout the day, and he played that perfectly. I know that others were giving some great guidance. We got some great crown traders over there in the Chart Goat University. It's a place where you can learn to chart, trade with some folks who have a little bit of experience, and as well get some buy and sell alerts. It's the sell alerts. Most people are looking for those buy alerts, but it's the sell alerts that can really come in handy. It's the we're taking profit, right? And one of the big promises I've had with you guys is that I will let the Discord know first when I sell my NVIDIA. And right now, like I said, we're going to go into that chart in a minute, and that's only been breaking out. So, all right, let's just go over a few things. Is this a bear trap? I want to go over some data points. The August panic caused a major shift in bearish sentiment. So what we saw is that when we got into August, and it made sense, the market dropped nearly 10%, which was very unexpected. There was events abroad in Japan with their financial system that was impacting ours. And so there was a lot of events. People weren't sure whether it was war news or what was driving stocks down, but all of a sudden somebody pulled the trigger on the sell button and the algorithm was just dropping hard. People were panicking that the Fed had acted too late. The economic data came out with a higher unemployment, and everybody felt for a brief moment that he had failed, that now we were getting into stagflation, which meant higher inflation, higher unemployment, a terrible scenario for America to go through. But a lot of that was just panic. We saw in the VIX, I brought it to your guys' attention throughout the entire event, that the VIX shot up to the same level or near above 60. It shot up to the same level that we had hit in fear when the COVID crisis unfolded. And we have to know that in the middle of this election year, that we were not facing a global economic shutdown. And so it did appear to be a massive overreaction. I wouldn't call it a manipulation. I would just call it a series of events that smacked stocks down and created a buying opportunity. There was guidance here on this page along the way. One of the biggest points that I made was rarely does the S&P go down more than 3 weeks in a row. On that fourth week, I kept repeating that. Rarely does that happen. Almost never. This is the moment in time in which we need to be watching for a rebound. And whoa, was there a rebound? And the minute we got that first week booked, people were still scared. On that note of fear, Google searches for recession spiked and hit the same level that they did in 2022. So as far as the retail market was going, they were trying to figure out, do I sell everything I own? Are we descending into a massive recession? And I saw a lot of FUD. But the benefit of being a technical analyst and following the charts is that we are not trying to get ahead of it. We know that emotions work against us in trading. It's always two big emotions. It's always going to be fear of missing out. I know that's what a lot of people are feeling right now because they didn't load the boat. A lot of people sold on the dip. And then the fear of missing out, which is greed, right? And then the FUD, the fear, uncertainty, and doubt, right? Just the panic that we're going to be staying and descending into a recession. Now, is a recession around the corner? Could this be a bear trap? The answer is yes. We have data that's pointing to a slowing economy, possibly ahead of us. However, I've said it in my Friday's video, and I'm going to refocus you on it today. And it's the fact that the economy Q2 earnings was very strong. And typically, if the Fed hasn't come out and given the markets an emergency rate cut, then it means, in his view, He's still concerned about inflation. And so let's just keep it real. Even though the Fed has been dovish, and we're going to get some talk from the Fed this week, and we had some other talk from some other Feds, and all of that talk has turned more dovish. The fact is, until he cuts, he's not dovish, right? He's maintaining a hawkish stance until he cuts. And if he's maintaining a hawkish stance, it means the markets can continue to climb because he's still seeing strength. That's the basic idea. And so the way that I managed my FUD against my FOMO was on the dip, I wanted to choose a best-in-class stock. I mentioned this, a stock that's been a winner all of 2023 and all of 2024. And for me, the clear opportunity was NVIDIA. One of the reasons why I chose to load up on NVIDIA at $96 and $94, and everybody was told the Friday before Monday, when it dipped down to $90, everybody was told where I placed my limit orders. The reason why I chose NVIDIA was because I had been tracking it to get back in, because I also had been saying for a long time, people asked me on this page repeatedly, Josh, when do we load the boat on NVIDIA? And I said at least 30 to 32% after a stock split and after we have a defined high. And getting us to $96 to $94, that was the 32%. And so that was the load zone if you stick to your plan. Now, I've been doing this a long time, guys, and I'll tell you that it's hard for me to stick to my plan, but that had been my plan. It helped me to redefine it every time I was asked, Josh, when are you going to get back into NVIDIA? When are you going to get back into NVIDIA? When is NVIDIA a buy? 32% down from its all-time high. People said, explain it to me. Based it on past experience, based it on Apple stock split back in the day. When it peaked and split, right, after it had split, it peaked. It then came back around 30%, and that was the buy zone. So that was as simple as my logic was. That's where I loaded. Now we're screaming forward, and we're going to have to go over that chart to today. But before I go into that chart, I want to say a couple things. It's likely going to be a choppy week. We're actually driving higher at the beginning of this week, knowing that at the end of the week, the Fed is going to be talking at Jackson Hole. Now, what does the market expect out of that? There's one thing that the market expects from the Fed. They want to see him actually say that a cut is guaranteed in September, right? So the market's pricing in a 100% chance of a 25 basis point cut. And I believe the last time I checked, it was around a 24% chance for a 50 basis point. Now, what they want is for the Fed to say that he will cut in September, and that just gives the market the assurance that the risk that they're taking makes sense because everybody's on the same page. Now, largely, I would suggest that everybody is on the same page because if you start looking at things the Feds have been talking about over the last week, all of them have gone dovish. Fed Governor Waller, he spoke this morning at 9:15, and I found something quite entertaining. I watched a little bit of the speech, not the entire thing, because it really wasn't about interest rates. It was but what he did say that I found totally interesting was he said, "I'm not allowed to talk off script anymore," and so he basically got his paperwork prepared and literally read it from cover to cover. That was his speech. There was no ad-libbing. And this was just a reminder to me that all the ducks are in a row, right? Right now, in this moment, the markets are hanging on what these Feds say, and they know that the message has got to be clear. And I also want to remind you guys that these governor Feds, they're going to only be there to be the adjustment for what Fed Powell is saying. They're never fighting each other, right? They're positioned strategically. So if you hear one of them be hawkish, it means the Fed wants to dial up hawkishness. If you see one of them be dovish, it means the Fed wants to dial up the dovishness. So some dovish things that the Feds have said recently. Fed Kashmiri, he said, the need for balancing of risk has shifted. Fed Goolsbee said last week the Fed shouldn't be restrictive. And Fed May Daly said the time to cut has come. And so those are the types of things that we're hearing, and we know that the Fed's going to speak this week, and we know that the markets appear to be rallying here on Monday, and it wouldn't shock me if they drove up largely into the end of this week. But we've got a couple important data points. Now, where the data becomes extremely important and where the markets could begin to shift would be Thursday and Friday, but it wouldn't shock me if the markets began to sell down on Wednesday in preparation for the Thursday and Friday data. We got jobless claims, manufacturing PMI, and services PMI and existing home sales all coming out on Thursday. Those are all very important data points, but specifically the most important is going to be the jobless claims. And then we've got new home sales on Friday and the Fed talking on Friday. So this is the setup that we're in. Full V-shaped recoveries at hand. I'm going to take you into a handful of charts. The Fed's prepping the market with dovish talk. The market wants more. They want a confirmation of a cut in September, which I think is very reasonable. And there was some market moving stocks that we got to cover. So let's just dive into the charts. The first one that I'm going to talk about is AMD. Now, let me take you into the charts. I'm going to tell you what's important there, and then I'm going to give you guys my opinion. So really what I'm going to do is I'm going to tell you on the charts I'm going to cover here right now, how healthy do these charts look based on the fact that we had a nice, strong move today. How healthy of the move forward can we expect to get on these charts? So let's go look at them. Okay, I've covered AMD many times, guys, and the last time I placed this little bear here at the top, and I told everybody that we were going to get up to around 184. I said that would be the top. It was. This stock got slaughtered in the coming week. You guys are looking at weekly candles, but the last 3 weeks have been beautiful. But here's what I want to leave you guys with today. We are up against a major area of resistance. In that resistance, this is a LUXALGO breaker box. In that resistance, the bears and the bulls are somewhat equal. The bears appear to be possibly getting more exhausted at this level than the bulls would be. And it's going to be very, very simple. We've got to get above $162. We have to close a candle above $162, or this move that has been seen in AMD is largely going to get exhausted. And so I'm not bearish on AMD, but I'm telling you that this 162 is the story of bullishness, because we've had this massive move up from $121 all the way into this breaker box. We're absolutely up against structural resistance, which we have to respect. And we're going to see a lot of choppiness here, and it won't continue in a bullish path until it's above $162. I also want to remind you guys that we're still down 32% from the recent high. And so the stock overall has been trending down. We're fighting this major resistance at 153. And the MACD and the RSI are both on the line between the bear and bull territory. So this one is at a decision point. The decision is settled once the price gets above 162 in the favor of the bulls, and then we could return back to this 184 range. If we get rejected here at 153, then we're likely going to come back to this 130 to 134 range before going higher. All right, let's talk about ZIM. Now, ZIM's a very interesting chart. I've been asked a lot about ZIM, and the entire time I was asked about it, all the way starting back here at $40, I've been mega bearish on ZIM. I could see clearly that this downward path was slowly developing here. I reminded everybody a really strong repeat of selling at this neckline of $23. And if you had did that, you could have bought back at $6.73. A couple things I want to point out. If you follow the charts, this breakdown here at $54 was predicted. And if you take the top of this move to the neckline, that's the literal difference that we got from the neckline down to this, basically down to strong support at 1560. And so the charts predicted this move. But now we have a new prediction that we want to keep our eyes on, and that's an inverse head and shoulders pattern, right? It doesn't have the same width of price that the breakdown chart did, but we do clearly have an inverse head and shoulders pattern. Now, here's what I want this to be a teaching moment, guys. These candles here, these candles confirmed the breakdown. In addition to that, if you guys follow this page, not only did these candles confirm the breakdown, but it gave us another bearish structure channel, a ascending bearish channel that also confirmed the breakdown. And so all of this was beautifully confirmed. So before you jump into this opportunity with ZIM's news, a couple things to keep in mind. One, ZIM is a shipping company, and if we are moving towards a recession, globally, less goods will be transacted, which means that there could potentially be less opportunity ahead. This is the move up that they experienced based on the fact that from 2023 to 2024, the overall economy was stronger than people thought. But if we move into the end of this year, weaker data, we're going to end up coming right back down to this $6 range. And so I am not bullish on ZM right now. Unless it can get above 23 and produce us some patterns like we saw in the breakdown, we need to see similar patterns right here above 23. So we need bullish patterns above 23. All right, let's talk about NVIDIA, the golden child, my favorite stock, my money maker, my daily ATM right now. This is the one that's paying the bills, folks, is NVIDIA. Now, yesterday or Friday when we ended, we were pretty much right here. And I told everybody absolutely no reason whatsoever to sell this stock on Monday. I said this is a hold and that my immediate target was 131. Now, I want to point out a couple important things to you guys. We have a breakthrough of this descending line of resistance. Absolutely a glorious breakthrough of this descending line of resistance. A candle that got even bigger today. Now, where is my new potential back test price? Okay. We need to keep an eye on around this 127 price because the price could move up tomorrow, hit 131, and it could come back and back test this structure. That would make a ton of sense. So the structure is the top of this descending line of resistance. So what was resistance, and it really wasn't much resistance, but technically it still counts. What was resistance, if it gets tested again, price comes back after we hit 131 and it back tests this 127, it would give the moving averages a little time to catch up, and it would be a potential spot to load again if you're bullish, because I think that ultimately we're targeting this resistance zone ahead back at 135, and then ultimately we've got this all-time high price of 140. Now, let's talk about who's bullish on this. You guys know I'm bullish, but who else is bullish? Well, Goldman Sachs is bullish. And so I just wanted to give you their valuation. So right now, their base price for this is 135. So for perspective, they're already counting it as basically getting here. Okay, so their base price is 135 at this Lux resistance area. What they're saying is if earnings comes out, their bull scenario, okay, check this out, their bull scenario valuation based on good earnings and good revenue is $176 to $236. Now, let's examine both sides of this scenario. Their bear case is if earnings comes out poorly, their bear case is for a drop all the way back to $92 and even as low as $49. And so you have to know that we're going to see fireworks here next Wednesday. And let's just examine for a minute a completely bullish scenario. Fed tells the market on Friday at Jackson Hole that cuts appear to be necessary because inflation's cooled off enough. The data for unemployment doesn't come in bad on Thursday. And all of this just drives the market, fireworks and wheelies, all the way back to all-time highs. And this takes us into the following week where NVIDIA comes along and confirms that we're still in the middle of an AI technology innovation boom. Now, it can go either way. NVIDIA could turn out crashing these markets if they didn't blow it out of the park, or they could end up giving us a massive rally next week. Either one's on the table. Goldman Sachs sees the minimum price point where this conversation is going to be flushed out for NVIDIA at 135. If all of that happens and we get to 135 plus, my options are going to be up 100% and my stock is going to be up beautifully. And I'm going to have to shift to a perspective of hedging and protecting my profits. At the moment, I'm holding long because NVIDIA is continuing to win. Even though it took a little time to wake up this morning, it actually led the markets higher today. All right, let's talk about the bonus play. And I alerted this one in the Discord for my VIP members the exact moment that I bought. And we've got to cover one. Now, there's a ton. I have to highlight SUI, S-U-I. I like them right now. It's showing relative strength compared to its peers. And so I have been buying SUI. But this play actually hasn't woken up yet. And so that gives it a unique appeal because when it's forgotten, that's when it can be purchased at the best price. Let's go check this one out. We are talking today some bonk. I'm going to make it clear. People ask me after I talk about these, they ask me in the comments some of the very same things that I'm talking about. So I'm going to make sure my comments are clear. Chart does not have any buy orders. We are on structure, okay? So we're buying on structure. There's the structure for you right there. Structure was repeated right there. And we're sitting on structure here, which is aligning with our ascending line of support, okay? So there's your structure. So that's my reason to buy at 4017. Now, we do have this area of resistance above at around 4030. However, you can see the red bar is bigger than the green bar, which means that the sellers will get exhausted before the buyers get exhausted, which means that this is actually a pretty fragile area of resistance, which means that if I load up here and this red line, which is the 5 EMA, crosses back above the white line, which is the 20 EMA, then that's going to give us the framework for a much bigger move up. In addition to the resistance that's at around 29 cents, this descending line of resistance here, I imagine we could hit this. This is right around 4037. I would already be up 100% in profit by the time we got there. I could take out my original order and just let the rest ride. Don't have to ask me where I think it's going. I think that when we get into a full bull run for the altcoins, I believe that Bonk can hit a similar number that we saw with SHIB. Kind of think Bonk is the new SHIB, and that number is 4080, which would give me a really strong multiple on this particular trade. And the risk to the downside, there is absolutely risk to the downside. One of the areas of structure that is beneath us is right here at 4013. But we're talking about dropping from 4017 to 4013. And we're talking about the opportunity of moving up to 4037. And what does that mean? And what does that represent? It means and it represents that I have a much better reward to risk scenario. That's the type of trade setup that you want to get in. You don't want to get into these when they've run up already, because then once they're back in the middle of their moving averages, then there's this huge opportunity for them to either come back to the bottom or break higher. Right now, the move favors a breakout. And, you know, Bitcoin has some bullish news ahead of it. Tomorrow, I'm going to do a deep dive into some of the news and the technicals with Tim on Technical Tuesdays with Tim on crypto. And we're going to outline some of the reasons why, even though I do expect the markets to be choppy through the remainder of August, there's a huge amount of opportunity in crypto over the course of the next couple months. And so in the short term, we can move back a little bit. But if you take a span away from the charts and you look at broader than 30 days, in 60 and 90 days, this scenario looks pretty attractive. Guys, that's going to wrap it up for me today. One more time, if you haven't hit that like yet, but you made it this far, then push the video out to more viewers by hitting the like and hit that subscribe and begin to get these daily updates on stocks and cryptos and my winning plays, guys. That's really what this is all about, is trying to make some money. And I'm sharing with you what it is I'm making money on and how long I'm holding it. And you'll also find out when I dump those bags. You'll find out a little bit later than the Discord. If you guys want to be part of that community with crowned traders, myself, and the analysis that I'm dropping there daily, I'm going to leave a link in the top pinned comment for you to come and join the SWJ fam, the Chart Goat University. It's where you can learn how to read those charts better and how you can learn how to take risk. And when you can find out when other traders are going long or going short. That's the game plan. Appreciate you joining me today. We'll see you again in tomorrow's video. Peace and blessings. Take care.